After I did my video on revealing my 20x growth stock, I decided to do a part 2 video to this one, and I wanted to reiterate the point because I don't normally share a lot of things that I do on YouTube, and I did share this one. It's a little bit more speculative, and I got a lot of good comments, so a lot of you guys have thanked me for sharing it. You have interacted with me, you asked me a lot of good questions on the business, and I loved the comment section. But I got a very interesting comment, and this is something that I have to talk about to make sure again that I'm reiterating the points that I said in the video, and to make sure I'm just explaining everything in general. And the comment says that if you truly believe the stock has 20x on the upside, then why did you only put 2% of your portfolio? So in other words, if you truly believe in what you're saying, then why did you just put 2%? Why don't you risk more if you're so confident that the stock could go up 20 times? One of the main points in my strategy is position sizing. And I never shared this, but I'm going to explain the whole strategy to you guys. So I split my position sizing into 3 different categories. The first one is the quality stocks. So quality stocks are like stocks like Berkshire Hathaway, stocks like Amazon, Google. Now, those are very safe, high quality companies, and they're just safe companies in general. And they're not too volatile. And they don't have crazy amounts of upside. Because they're not too volatile, because they don't have a crazy amount of upside, you have to put more money into them. For example, if you put in 1% of your portfolio in Berkshire Hathaway is not going to go up 10 or 20 times. 1% in Berkshire or 2% is not going to move the needle. You need to put in 10% in Berkshire or 8%. So I start 3 to 6% and I DCA into a 10% position. That's what I do, for example, with the quality stocks. Then I have a small percentage of my portfolio into the growth stocks and what I would call speculative investments. Speculative investments is mainly whatever you look at Google's income statement and you see something called other bets. Other bets for Google is a tiny percentage of their portfolio, maybe 1% of the entire portfolio. And most of those bets are money losing bets. But the delta between the upside of those bets, if they do work out, and the cost of owning them is so huge that it's worth owning them. Now, because the delta is so huge, Google does not need to risk 100% of their portfolio for those bets to work out. Because if one of those bets work out and this bet goes up 50 or 60 times, Google does not need to risk a lot of money. But if Google is wrong and Google doesn't make money on those bets, then Google doesn't lose too much. And this is called the barbell strategy. With the barbell strategy, I have most of my stocks in a low chance of loss. So the quality companies, great companies, long-term investment, all those things. Then I have 15% of my portfolio into the wild cards. So those are riskier investments, growth stocks, speculative investments, high potential kind of stocks, where if they do work out, I make a lot of money. If they don't work out, I don't lose too much. Now, with a stock like Ouster, I told you guys that Ouster is a speculative investment. I told you guys that Ouster is unprofitable. And I told you guys that Ouster is diluting shares. I gave you everything. I never lied to you. I gave you everything in the video. And I told you that I started with 2% of the portfolio, and then I've been averaging up over time. Now, if I believe Ouster could go up 20 times, do I really need to risk more than 2% of the portfolio? Do I truly need to put in 10, 15% of my portfolio in an unprofitable company? This is the thing that you guys don't understand with me, is I understand all your concerns. I understand that the company is speculative. I understand that the stock is up. To me, it's a speculative investment. It's a tiny percentage of my overall portfolio. So I only need to risk 2%. If I'm right on Ouster and it goes up 20 times, I make a lot of money. I don't need to risk more than 2%. But if I'm wrong on Ouster and Ouster goes down 50% and never recovers, then I don't lose too much. But I know most of you guys, let's say Ouster maybe goes down 50%. You're not going to maybe focus on everything I said around position sizing or the fact that I said it was speculative. You're going to focus on the fact that I talked about Ouster and I hyped the stock up and I pumped it up. And that's why I don't share all those things on YouTube. Because most people, they focus too much on the stock price and and the thesis on the company and if whatever they're gonna make or lose, but they don't put too much emphasis on position sizing. And my entire strategy is based on position sizing. So with Outstore, the way I'm thinking about it is I have 2% of the portfolio. I've been averaging up. The stock has gone up as well. So now it's around 4% of the portfolio. So if I believe it could go up 20 times, why do I need to be greedy and risk more? This is not Wall Street bets. We don't need to be degenerate gamblers, because this is like Google's other bets where it's like a moonshot. If it works out, we make a lot of money. If it doesn't work out, then I don't lose too much. So that was just a simple one here, but I really wanted to reiterate the point because, again, many of you guys told me, is it only 2%? If you truly believe in what you're saying, why don't you put more? I am not a growth investor. I'm mostly a value investor. I invest in value stocks. I have a lot of quality companies in my portfolio, but this is only a small bet. So if it works out, I make a lot of money. If it goes down 50%, the fundamentals are great. This is good news. I buy more at a lower price. And if I'm wrong, then I take a loss and move on. So if I'm up 30%, Outstore goes down 50%, I instead of being up 30%, I'm up 29. Is this such a big deal? It's not a big deal. So I hope you understand what I'm saying here, and I hope you understand the thesis around Outstore. This is not Google or Amazon or Berkshire Hathaway. This is more of a smaller bet, like a call option within the portfolio. I hope you appreciate that I'm sharing it on YouTube. I'm not sharing it to pump the stocks like some people said. I'm not sharing it to do any. I don't need to do that stuff. I don't share everything, but I'm doing my best to share more of the things that I'm doing. And a lot of you guys appreciate it. So I hope you got some ideas. Hope you enjoyed it. And I hope you understand the thesis behind Outstore and how it fits in my overall portfolio and how I think about position sizing in general, which is very important. And I hope you enjoyed it. Again, thank you for watching, and I'll talk to you in another video.